Hey everyone, welcome to today's webinar. Really excited for you to be here. It's really snowy up here in Boston. Not sure, I know a lot of the East Coast got hit. I hope you're staying warm, staying safe out there. With me today is Gabe Donnini. Really excited to kind of have this real data-focused webinar. Again, really what we're going to focus on is the Amazon data trends in particular from 2020 and a little bit about, well, how should those play into your 2021 plans? What do they tell you about the marketplace? And again, what are things that maybe are not as, let's say, long-standing, things that might not last a long time, and what are things that are maybe more indicative of things that should play into kind of the way you might change tactics, change strategies as you kind of think about your New Year's plan. So just a few housekeeping notes before we get started, and as more people kind of trickle in here. Again, you'll get a replay of this webinar roughly 24 hours after this ends, so sometime tomorrow. And additionally, at any point during the webinar, if you have questions that come up, we're going through something and you have a question, use that question box on the side of your screen there, enter it in, and we'll get to as many as we can at the end of the webinar. Now, just a quick note, we do have a full hour slated for this webinar. It may go a little shorter, again, depending on how many questions you guys have, but just a heads up there. So if we can give you a little extra 5-10 minutes back, all the better. So with that, let's get into it. So my name's Andrew Waber. I'm the Director of Insights at Takemetrics. If you've been on a webinar before, you've probably seen my face, but a new face here is Gabe, Data Science Product Lead over here at Take. Hi, Gabe. How you doing?
Hey guys, super excited to be here. Thanks for having me on the show.
Great. All right, so just for those of you that, again, maybe a little bit unfamiliar with Takemetrics, our software combined with our team of expert analysts really helps, again, the top brands when you're thinking about winning on Amazon and Walmart. Again, this webinar is going to be focused on Amazon stats, but we're one of the only 4 advertising API partners for Walmart. So we help brands here, some of our clients here, succeed, again, across kind of maximizing their advertising effectiveness across both of these marketplaces. They're both very different. As Gabe knows, as Gabe's kind of, as we kind of really make the Amazon and Walmart bidders that much more robust, there's different challenges to each. And it's really helpful to have a software that kind of understands those nuances, is making those changes based on, again, the different dynamics there. So a quick rundown of agenda before we get started. First off, we're going to go through some high-level data about what happened Cyber Week, right? This just wrapped up earlier this month. What went on, and really what are some kind of large trends that we're seeing just at a high level. And then we get more into the meat of how consumer behavior is shifting on Amazon and really what we're seeing there. And so first is search behavior, kind of really how are consumers searching on Amazon? How does that trickle down into some things around click-through rates, conversion rates, et cetera? So we'll talk through a little bit about that. And then we're going to go through this study that we did earlier this year around attribution length, which is very, very interesting in terms of thinking about when should you be able to make decisions? When can you make an educated guess based on the performance you're seeing? And then we'll wrap up with some, again, looking at that data. What are some takeaways that you can, again, take away from this webinar, take into 2021, make adjustments if need be? And then, again, we'll wrap up with some Q&A. For the folks that maybe just got here, again, you'll get a recording of this webinar if you missed anything. And then additionally, again, at any time, please enter those questions in the question box. We'll get to them at the end with as much time as we have left. So with that, let's get into what happened during Cyber Week. So a quick overview of the methodology here. So what we looked at was a daily average comparison, and specifically looking at kind of the week prior to Cyber Week, kind of what was those daily averages we were seeing versus the daily average we were seeing right during the meat of Cyber Week, right? Thanksgiving kind of through all the way through the end of Cyber Monday. And then you'll see some kind of year-over-year comparisons. This is looking at, again, the same time period, obviously, week prior versus week of. However, keep in mind, when you look at these year-over-year comparisons, taking them more as directionally, because, again, we're looking only at Takemetrics' client base, which there have been obviously some changes year over year. So think about these more as directional, right? What we're seeing is kind of a general trend, and these are, again, good things to keep in mind when you kind of think about your own Cyber Week performance. But but again, these are more directional. Think about how they're in the context of the larger market. And when we look at, we're also going to show you some comparisons on a volume basis, looking year over year, and kind of those baseline, right? We talk about percentage increases here. Where are they increasing from? We wanted to look at the volume throughout kind of the rest of November. And so for that, we looked again at the 1st of November through the 25th, which again was right before Thanksgiving in both instances, in both years, and seeing what the differences are there. So what's kind of interesting is just at a high level, volume jumped, right? You can see this is again compared to the baseline. Volume went up during Cyber Week. Not a surprise, right? What maybe is a little bit interesting is looking year over year, again, with these two different cohorts, but kind of an interesting directional type data, is that the jump wasn't as much as what we saw in 2019. So it's kind of some key takeaways. You saw some smaller gains, kind of a little more pervasive across categories. Now, electronics still saw the biggest jump as they did last year, but right, it wasn't as high, right, as you can kind of see here. Toys and games probably the most similar, but again, there's some differences here. So I think it's really interesting to note that Cyber Week's still a high traffic week on Amazon, but if you were looking for those crazy jumps that maybe you saw in prior years, it's likely you may not have seen that here, that there was still an increase, but not necessarily what you were expecting.
It's also important to note that we're in a different marketplace this year, a different environment. COVID has changed things. It's changed consumer behavior, and people are undoubtedly shopping differently than they have before. So we're still seeing the same trends. We're still seeing the same pervasiveness in Cyber Week that we see for electronics and toys and games heading into the holiday season. But it is without a doubt a different year this year, and we're seeing that as we head to closing this out.
Yeah, and just bring that home. This was super interesting. Was we looked at those baseline volumes, right? Those last stats were how much did the traffic jump from what we saw the week before? Well, when you look at what was that volume the week before, you're seeing in 2020 those volumes were just higher. Those baseline volumes were higher. And Gabe, to your point, I mean, it's a lot more people are shopping online, so you see that just overall activity was up. So that may have played a bit of an impact in terms of that slightly muted jump, if you were. So, Gabe, as you talked about, right, they're more, given COVID and all the dynamics around that, you could see online shopping be a little more, likely, and you see it kind of across some of these categories. So that may have impacted again those percentage jumps that you saw during Cyber Week in particular. So what's the other side of this is kind of, again, unique to advertising is what were the kind of cost of advertising? And this kind of ran the gamut. You saw a lot of different dynamics happening here. So compared to 2019, you saw different categories see kind of bigger jumps. Again, this is not looking like for like, so keep in mind it's more directional, but it kind of underscores where there was more competitiveness in certain circumstances this year versus potentially last year. So what you can see is like obviously toys and games kind of blew away in terms of that increase in CPC. So you could see that just being very much a more competitive category this holiday season. And when you look like last year, right, big increases we're seeing in beauty and personal care, but a little bit less so this year. So again, what categories became more competitive during this time period is definitely an interesting one to watch.
For sure. And again, I think when we're talking about competition and we're trying to make sense of the marketplace, it's always important to tie it back to real life and consumer behavior. And it goes back to the fact that people's lives have been different this year. We've been outside less, we've been entertaining and going to see entertainment less. And so there's less pressure on categories where ordinarily you would be investing there as a consumer. And there's more pressure on categories that have to do with this sort of stay home post-pandemic life. Yeah,
no, that's a great point. I mean, you see, it's pretty clear here, right? The two biggest jumps last year, clothing, beauty, and personal care, right? Ones that, hey, I'm going to get dressed up to go out. Well, you're not doing that as much anymore. You're not potentially using makeup as much. So really, you see it kind of reflected here, these kind of large scale trends that you're talking about, Gabe. So this is a kind of interesting graph that we saw just based on all of last year's data, which was really the biggest thing to take away from this is, right, there's still time to execute. If you didn't really have, let's say, a terrific Cyber Week or maybe as much as you're expecting, at least when you looked last year, you kind of saw conversion rates continue to rise, leading all the way up through the shipping cutoff. So something to keep in mind that even if you maybe, again, Cyber Week was good but not great, you know, if you can keep your foot on the gas, as it were, and really put yourself in a good position, there's still conversion to me, right? People are still shopping even outside these dates. And probably the volume metrics that we talked about earlier really show that, right? People were not nearly as tied to these shopping events potentially as they were normally, right? I'm at home already, I'm working from home, I have more time potentially to shop online versus, you know, if I was, you know, during right pre-COVID where I had to go to, you know, I had to do a commute, et cetera. So, you know, you may see this rise be a little more muted, but people are still shopping, right? It's still happening at other points of the year.
Right. It's also, I'd say, important to note that on the tail end of this, you can really see the shipping cutoff date and the impact there. So just in the same hand where you want to be prepared for the holiday season and, you know, prepare your budgets and performance targets accordingly and get ready for that increased consumer intent. On the tail end, you also want to be prepared for it to fall off and sort of mirror that natural consumer behavior where we're spending time with our families, not going online as much, not making as many purchases, and really just taking this time to relax and enjoy the holidays.
Yeah, absolutely. All right, so now we get into behavior a little bit more in the deeper behavioral aspects. So how are consumers searching on Amazon? And we looked at specifically here Amazon sponsored product activity. So we weren't looking at sponsored brands or DSP or all that stuff, just sponsored products. We looked at entire months worth of data, March 1st through March 31st. And we're looking at query length. So what happens when, you know, if you're kind of segmenting queries based on the character length. So this includes spaces as just a note, but some really, really interesting trends here that are kind of good just from a, you know, high level. Again, there's some good news in here, and you could say there's some maybe not so good news or kind of some mixed news, but really all this demands a hefty degree of nuance, right? Nothing here should be like, that's a rule and that's what you do, but it's more, should be informational and things that you kind of take again in the context of your own business and what you're doing and what you're seeing. So I think the good news thing that's very, I guess, easy to see in that way is there is this correlation between query length and click-through rate and conversion rate. You kind of see it. I mean, you know, it's a very much more direct comparison when you look at CTR. Conversion rate, I mean, I think the biggest thing to note here is, right, when you get those super short queries, you're seeing, you know, 3 characters, 3 to 4 characters. Those things are so low that it really cut those out, right? Those aren't, you see the conversion rate's pretty low. And when we look at frequency, right, those aren't searched for very often. We're going to look at that in a minute. But right, you do see as a query gets longer, hey, guess what? CTR and conversion rate go up, right? Think about this, and Gabe, I know you like talking about, you know, how this relates to consumer behavior. It's the idea that when someone searches for a longer thing, they're probably more exacting. I know a little bit more about what I want to buy. If I search a little bit shorter, I'm probably a little bit more open-ended, right? We had that example of water bottle before. Well, after I go through water bottles and I'm like, you know what, I want this one from Nalgene. Well, now my query's gotten longer and I put in some segmenting information. Yeah.
And your intent is stronger, and you're more likely to not only click the listing because you know what you want, but if you're really interested in it, you're more likely to buy it, leading to a higher conversion rate.
Yeah. Yeah, so this is super interesting because it can kind of, and I think about this in the context of your own marketing. When you're looking at where folks are converting from, at least on a rate basis, where you should see this likely reflected in the metrics that you're seeing. Okay, but now let's pull back a little bit.
And one other thing to add here, and Andrew is really getting at this, is that when we think about intent and we think about the customer journey and that natural buying process as it evolves, as Andrew was just describing, there's 2 sort of key things happening here. On one hand, as things get more specific, the query gets longer, but they're more likely to engage, you're more likely to actually end up making that purchase. And that is not only mirrored in essentially the query string itself, but also in how we as consumers go through the psychological process of evaluating new products. You might for instance, look at water bottles if you're in need of a new product, and then continually refine that as needed. And what this means to us as sellers, though, is that we can take this information, translate it into our marketing strategy, where we essentially are willing to pay or invest or dedicate different portions of budgets to different allocations of this marketing strategy as it falls along the consumer journey. That way you're not over investing in an area where maybe you're just building intent and awareness, and you can really step on the gas when you know that you've really built that intent, and now you're just trying to capture market share and make sure that you're at the top of the search results and getting in front of consumers when it really matters.
Yeah, and a good, I think maybe a use case for that is when you think about people, rather than adding brand names, they're adding features, right? Maybe I look for a water bottle, but now I want one with like a built-in straw, right? And maybe you've got a water bottle that you built that has a really good, aspect of your product like that. And that, I mean, I think Gabe, to your point, is like a really good example of that, where it's like, branded searches versus generic search is kind of a separate issue. But really, just in terms of length and like feature set, as people add those in, that's, again, to your point, like a really good signal of like, I know I'm perfect for this consumer, and we can see that in the data, and let's like have the investments that are going to make that happen. All right, so pulling back a little bit though, obviously the flip side of this is that, guess what, those longer searches, those are great, they convert really high, they happen a lot less often though. And right, we talked about those super short searches, right? Didn't have a great conversion rate, but also searched for at a very low rate. But then you kind of see both of these graphs kind of follow each other, and that when you kind of from a volume perspective, you see the most clicks and the most conversion volume happening in kind of that low teen range in terms of character lengths. Again, this isn't necessarily, doesn't mean like, oh, I want to specifically target only only search terms that are this long, but it should give you directionally kind of an expectation of what, again, what you should plan for when you're kind of thinking about, okay, where am I allocating budget, and what should I expect from a volume perspective, right? If you're getting those very, very long keywords, maybe they expect high conversion rates, but not a huge conversion volume. And similarly, as you move back kind of into that middle range, the expectations for volume should be a little larger, just based on that length. And this gets more into the kind of strategic aspect, Gabe, that you were talking about, and more so than the length, which it's important again in terms of monitoring your own success. But where should you kind of be looking? Where's the biggest opportunity? And this was kind of analysis we did looking at just the top keywords via ARA across multiple categories, and kind of separating them into branded versus category or generic terms, as it were. And right, it's pretty unequivocal, right? More people are search for category terms than branded terms. So there's just search for much more frequently, they're much more popular. And it's because, as Gabe talked about, right, that's the start of buying journey, right? I'm not going to come in, if I have no background in product, I'm not going to search for your brand immediately, right? That comes through a process of, I'm searching for products, I find a few I like, I'm researching those, and now I'm doing a branded search. And this should really play into your strategy. I mean, when you're thinking about, if I'm launching a new product, category terms are maybe ones that you really want to focus on to build that volume. But then, right, as your product potentially gets more mature, your brand actually does become more well-known. You take a strategy where you're moving a little bit more towards that, although obviously never completely. But so this is just a good rule of thumb, and you see this obviously reflected in certain verticals more than others. But again, it's pervasive. So home and kitchen, potentially not surprisingly, if I'm searching for a sink, I might not know a lot of sink brands as an example. Toys and games, though, you can see maybe a little bit more driven by branded terms.
For sure.
Yeah.
Yeah, and as a seller, you can use this information along with what you know about the customer journey to make some tactical decisions about which terms you're going to invest in. Because, like, for example, in home and kitchen, let's say you had a kitchen mixer. Well, we all know KitchenAid has probably the leading brand in that space, and so targeting their brand terms might not be the best strategy if you're trying to get the most bang for your buck. But you can look at the volume of category terms in that category. Maybe not. Let's not use mixers as an example, but instead like garlic presses, where there's a lot of different garlic presses out there, and you might be able to benefit there both from the sort of the lesser differentiation, but also the volume of search terms there.
Yeah, that's a great point. So kind of get into this idea of what Gabe was talking about, right? Your data should inform your keyword strategy. Now, this is kind of a simplified example. There's a lot of things, at least when it comes to the way Takemetrics kind of architected, that go into this, but these are kind of good, baseline levels to kind of focus on, which is, as you're looking at a keyword, you want a great conversion rate, right? It means your ad's resonating, people are clicking and they're buying, but then you also want to look at volume, because that should indicate, okay, when you think about your overall investment as you're budgeting for these terms, these are two key stats, because it's not enough. If you just have really heavy on one, but the other stat kind of just is not very good, you're not going to put yourself in a great position. If you're seeing both of these, let's say, rise at the similar rates, okay, I'm seeing conversion volume going, and I'm seeing conversion rate, right? That's a really good signal that your ad's resonating, that people that go to that keyword are clicking and they're buying, but also that keyword itself is driving significant volume that's going to have knock-on effects for your organic rank, for obviously your even ability to actually get paid search ads at a lower rate, just based on, again, some of Amazon's algorithm. So these are kind of baseline stats to focus on. But Gabe, I don't know if you kind of have other stuff to add here on terms of.
Yeah, no, I think you really hit the nail on the head, which is that our ability to double down, so to speak, should be heavily predicated on the amount of data we have to make that decision. The Takemetrics bidder will automatically adjust your bid based off of the conversions that we've observed, the sales we've observed, to make sure that we're always bidding at a level that is going to be profitable for your business. This is really, really hard to do it manually. It's really, really hard to do manually at scale, especially because from a human perspective, you could be presented with 5 different search terms, which have 5 to 10 conversions each. And it'll be really, really hard to figure out, well, which one do I want to raise the bid on? Which one do I want to lower the bid on? And make that kind of decision. So the bidder takes all of that guesswork out of the picture for you and will automatically help you figure out, well, given what time of year, what price is my product selling at, what should I be bidding on this search term and how much? And that's really key to being successful in the highly competitive holiday season.
Yeah. Awesome. So last piece of research we're going to go through today before get to questions and all that. How much does attribution window length matter? And this is obviously a hot topic across some of our advertisers here. So again, this one looked solely at Amazon sponsored products activity. And we this one, we looked at a full year's worth of data. So June 2019 through June 2020. So a lot of data here and a lot of volume, and this really shows it's a really robust analysis here by members of the DS team. So big takeaway here, and we'll go through the nitty gritty, but brands on Amazon, like you, should have a reasonable amount of confidence that the vast majority of conversions will be attributed within 7 days. It's kind of a good takeaway, right? You may have been looking at the 30-day attribution window. We'll go into the data, but basically what we're seeing is the vast majority, they're coming in within 7 days. So here you can kind of see there's a nice kind of handy guide for you, kind of showing how metrics settle, right? So, the way we talk about settling is like, when does the kind of the volatility kind of really go? I mean, they're kind of, what you're seeing is what you can expect. And it may be sooner than you think, right? You're seeing things like, again, impressions and clicks are settling. Their expected settling is about 2 days. And you kind of see here, right, that in the realm of clicks, 95% of clicks attributed to that are going to arrive in 1 day. So yes, there's some latency, as everyone knows about with Amazon, but you can still examine your metrics earlier and make decisions, right? Because we know that not much is going to change after a certain period of time. So bringing this home a little bit, you can kind of see the actual graphs here. And I'll send along, again, with the replay of this webinar, also links to each of these studies so you can kind of read through more in depth, take a deeper look at these graphs. But you notice they all look very similar. Some of them more similar than others, but that you're seeing kind of after just a certain period of time, that graph kind of just starts leveling out. Yeah. And 7 days is kind of that, I'm gonna say magic number, but that's right around where it's like, hey, guess what? what you're seeing there is probably what you're going to get for the most part.
Yeah, no, and
Yeah.
I think it's really important here to understand this is a little bit of a double-edged sword, as you all probably know. Now, because on one hand, we start looking at data too early, we might make a judgment call to turn off an ad that was actually going to do really well for us because we just didn't have the opportunity to see those conversions roll in. On the other hand, though, if you wait too long to turn off an ad that may or may not be seeing conversions roll in, you could unintentionally, the difference between 7 and 30 days is 3 weeks. So you could unintentionally end up wasting budget on an unprofitable term for 3 weeks or more. So from a profitability perspective, from a growing your business perspective, obviously this is pretty bad news. Fortunately, our bidder utilizes 7-day attribution windows. We're also using like a dynamic look back window, which looks backwards in time and weights data based off of recency. And this helps you from a sort of a mathematic perspective, always ensure that you're encapsulating the most recent data in your conversion rate estimates, but you're not too heavily reliant on any one day. Obviously accounting for seasonality and things like that. But what this really does is it provides a little bit of a smoothing effect, helping make that bid more accurate, helping drive greater profitability, and taking, again, a lot of that guesswork out of, well, hey, do I have enough data here? Should I keep spending? I've already invested $100 on this campaign, or I've already invested $1,000 on this campaign. Do I need to invest another $5 to know, or can I stop? And that's the value of Teikametrics bidding technology.
Yeah. And love that. And as we think about, okay, all that we talked about, kind of some key lessons as you kind of think about 2021. First is going back to the, some of the stats we had around keyword length, right? This is more of an overarching lesson, but CTR or conversion rate alone shouldn't be your only way to kind of value a keyword or search term, right? And having tools, as kind of Gabe mentioned, to help you automate decision making based on kind of a number of factors that impact that overall value is really important. Essentially, there's no one perfect metric. There's a lot of ones that can be very instructive, but it's when you kind of combine these on top of each other and also given your business's prior performance, that's going to put you in the best position to really attach a good value and make better decisions when it comes to budgeting, bidding, et cetera. And we just talked about this, right? Beyond the 7-day attribution window, the impact of looking beyond that is a little more limited, right? You can probably confidently make decisions a little earlier. And so, right, as Gabe mentioned, right, there's some caveats to this, obviously, but overall, this is kind of a decent rule of thumb to take into account, right? As you're thinking about conversions, especially when you're thinking about even lower funnel metrics like clicks, et cetera, that you can look a lot earlier than the attribution window you may have set up to kind of make a good determination. And then finally, kind of going back to the Cyber Week data, and you kind of see here, we're going to have a full, kind of larger analysis of Cyber Week coming up at some point. So keep an eye out for that. But even just the stats that we mentioned, right? When evaluating your holiday sales, think about this like longer term view. Because 2020 was a strange year, and behavior in terms of how consumers shopped over the course of, really from Halloween or even earlier, could have potentially been impacting some kind of overall holiday sales. It's a real thing that you need to kind of take into account. So look at your overall year. It can be you could have had a terrific year, but maybe not had the Cyber Week that you were expecting because you were looking like, well, last year I had a 5x increase in conversions. This year only at 2x. Well, again, if you take a little bit longer term view of what's happened, it can again maybe better contextualize what went on. Again, we talked about this at a higher level, aggregate level. Look at your own business, and maybe that's the case, maybe it's not, but again, worth looking into. And I guess, final note is, right, these trends that we talked about here, these are not, kind of talked about this, is not a silver bullet, and it's not something that's going to be true in perpetuity. E-commerce, et cetera, e-commerce as a market, it's always changing. And the best sellers that we see, the ones that we work with, are the people that are really keen to make adjustments. They understand that something that may work for a couple of weeks, a few months, can still just as easily go by the wayside in terms of potential keywords that were popular, potential keywords that converted well is one example. So agility here, understanding the lessons and then being willing to kind of unlearn them as the data kind of presents itself is, I think, a really good rule of thumb as well. And with that, I guess I just want to call out, we talk a lot about data on this webinar. And one big piece of what we're building as part of Flywheel 2.0, if you've seen kind of a prior webinar we did just roughly a week ago, is market intelligence, and something that we're kind of building into the next phase of the product. And again, that's still kind of in development, but we're rolling those features out as part of this early access program. And so if you're interested in kind of getting kind of a deeper view on, let's say, market intelligence is one example, definitely go to this address. I'll send this as part of the email. Sign up for early access and just click market intelligence as kind of your interest area, and we can basically make you among the first to know as those features are being rolled out. So thanks for that. And I think we'll get to questions now. So let's get to this. So this is an interesting one from Lita. I think I'm pronouncing your name right. Around the potential for like Prime Day, having it being so late, did that, what potential impact that had? And I don't know, Gabe, if you kind of have some thoughts around that.
Yeah, I mean, I think, it's really, really hard to say, right? I would say, did Prime Day have a positive effect? Well, from the data that we're looking at, it did. And the, overall effect was directionally in line with what we've seen in years past, but probably a little softer depending on the vertical. A large part of this has to do with consumer behavior, decreased consumer discretionary income, supply chain issues. And so it's hard to say on the whole, like, was Prime Day a success? Was Prime Day as big as it was last year? Like, was it a success in some areas? Certainly. Was there less than prior performance observed in certain areas? Absolutely. And I think that's, as Andrew was suggesting, sort of a natural evolution of what we've been seeing this year. And would I expect Prime Day to be big next year? Certainly, especially as we head into a recovery and consumers are looking to kind of get out of their house and ease up on lockdown restrictions.
Yeah, I mean, I know we saw just at a high level, anecdotally, was you had folks that are more, they sell outdoor gear, and so Prime Day during the normal time, right? That's happening during July peak time, where they can sell this outdoor gear. Well, now Prime Day shifted to October. Your entire product mix that might appeal to consumers is very different. So it's like for those, it was a big challenge. It was, okay, well, what should we obviously think about different deals? Should we do deals at all? So just even the nature of it moving, right, had, as you pointed out, kind of different effects on different verticals, even just by the date, let alone all the other things going on as part of, with COVID's impact. So this one's from Tammy. So she says, we've touched on this a bit, but she's seen other businesses in her category, which is an HVAC, I guess, supply company, using our competitor's name as a keyword. Is this a good practice?
That is a very interesting topic, and I am hesitant to say whether or not that advertising for your competitors' names is a good practice on the whole for a number of different reasons. But when you think, so let's kind of break this into two parts. When you think about the consumer journey and the consumer research process, we all look at different competitors. We all look at different brands. And so if you want to be part of that decision-making process, there are a couple ways to go about it. You can take presence further up the discovery chain when in terms of like awareness and that like initial decision-making evaluation process, or you can really try to capture the bottom part of that value chain by inserting yourself into almost every possible area of that final direct response portion of the customer journey. Now, the costs are different. in different stages. The brand differentiation is different in different stages. So without giving like a single answer across all industries, I'd say it really, really depends on the brand activity, how active are these other brands, and the level of differentiation across the brands. That's the first question I would want to answer. Once you have a good gut feel there and how you're because you don't want to annoy consumers by showing them that they don't want to see, and you have a good sense of how that will play out on that customer journey, I think you want to take the second look. And going back to some of the data we shared earlier, what portion of searches in your category tend to be brand versus category? Is there a big difference there? And what's the conversion rate difference? There's nothing wrong with doing a little bit of experimentation to see and get a sort of dip your toe in the water and get a sense of how effective that strategy will be for you. But keep an eye on the conversion volume you're driving. Keep an eye on the cost per click. Just keep an eye on how that cost per click is changing, because what you could be doing is bidding on a competitor term that they previously had no competition for. Someone at your competitor realizes that the cost per click is going up, they're seeing fewer conversions on that term, and so you in some sense sort of start a little bit of a bidding war. And so I know I kind of just answered that question in a couple of different ways, but the real takeaway there is be agile, be willing to change, look at the data, and then make a decision that's in the best interest of your customers. And then in that case, yeah, I would say it is okay, just depending on all of that.
Love that. So this is from Catherine, just wanted a little clarification. She said, I'm still a little unclear on the length of time to wait before making strategic decisions. Was it 7 days? So yeah, I mean, basically kind of at a high level, what we see is that the vast majority of conversions, roughly a little over 90%, happen within 7 days, regardless of the attribution window you kind of select. So obviously the 1 day, it's going to be sooner than that. But the idea being that, let's say you have a longer term attribution window, 14 days, 30-day attribution window you're looking at, expect that after 7 days, you can probably have a really good idea about how effective that the effectiveness of, let's say, that campaign, or how that ad is performing generally. So that's, again, a good rule of thumb to kind of keep in mind there. So I'm just reading through this question. This is from Jackie here. In past years, for Cyber Week, we've noticed even products not on promotion getting a lift, particularly in ad conversions from increased traffic. This year, we noticed ACoS spike for products not on promotion during Black Friday, Cyber Monday. Have you noticed this, and would you recommend pulling back on spend for non-promo products during Cyber holidays? So these are the question. I don't know if we have necessarily a, I think the weirdness of this year is kind of expressing itself in different ways, and maybe this is one, because I remember we actually did a study on Prime Day last year, 2019, and we saw exactly what you were seeing, at least during Cyber Week, which is even products that were not discounted still saw large, conversion increases, large revenue increases. One that discounted saw more, but it was still like kind of a rising tide lift all ships situation. So what's possible, and again, just because of the nature of the holiday, was because people were shopping a little bit more asynchronously throughout the year, that okay, they're shopping rather than just on these big holidays where all the volume's going up, that if advertiser demand was going up during those periods of time because everyone expected a big Black Friday, Cyber Monday, so more advertisers coming in, advertiser demand was high, but you didn't see that commensurate rise in traffic as much. Right, you would see CPCs go up, ACoS go up without that commensurate rise in conversion. So, it may have again been an impact of kind of consumers just shopping a little bit more distributedly and not jamming the site all during Cyber Week.
Another point that you touched on, which I think is pretty important to call out, is that a lot of things changed in 2020. Consumer behavior changed, but behavior of sellers and advertisers changed as well, because fewer consumers are out there in the real world, and the digital space is one of the primary avenues of competition at this point in time. There is a lot more competition for sellers. There is a lot more competition for sellers, advertisers, and that typically is going to result in increased costs that are generally reflected in increased CPCs or how much you're paying for a given amount of impressions. And so I know I keep coming back to this, but, and it might sound a little corny, but that's really where the power of complete automation comes into play. Because if you can dynamically respond to this rise in ACoS, compare it to the conversion rate you're seeing, the sales you're seeing, and basically use the bidder to maintain that profitability. Well, if we notice for one reason or another that the promotion is not working, or because you didn't promote, ACoS has been rising, and we just want to kind of like tamper that down for the time being. Using automation and using data science to do this is one of the most secure and rigorous ways to protect your business.
Love that. This is another question from Sebastian, because we have a couple more. So he's asking about, Amazon, the way they've been prioritizing some aspects of their business due to COVID, and how is this impacting data or the various things we look at in Amazon? I mean, I think there's a lot of, obviously this is a kind of loaded question, there's a lot there. I'd say, and Gabe, I'm sure you can add on to this, I think one of the biggest things that I know we noticed, this is from Marketplace Pulse did this study, which was like super interesting, which was looking at products listed with 2-day shipping windows and how that's changed. Basically, it was kind of looking really since like kind of mid 2019 all the way through. You saw kind of it's going steadily up, and then finally kind of where we hit March, it finally kind of dipped and kind of leveled there, and it started coming back up. And what was interesting is people did have this idea that, well, if Amazon is, was doing all this stuff with FBA where they were shrinking, the amounts and making a lot less items were coming in the amount of time, would consumers pull back? Were they going to be dissuaded by this kind of non-prime experience? And would that dissuade them? And the answer is essentially no, right? People came back to Amazon, people still shopped on Amazon. And what you saw is even right during Prime Day, people still signed up for Prime, even though some of the benefits that you were expecting around 2-day shipping weren't there as much anymore, right? There's some for some products, not as much for others. So at least from what we were seeing on the impact of like how these, at least from the delivery aspect, was affecting anything kind of involving Prime subscriptions or shopping behavior on Amazon, didn't see a ton there. Now there's other things. I think it's just making life tougher as a seller if you're relying on FBA because they have more restrictions now than probably ever. It used to be something you kind of rely on. It was like, great, FBA, I can use that. Now there's a lot more that you have to deal with as a seller. So I don't want to kind of downplay that. It's obviously been harder. But I think from a consumer point of view, we didn't really see some of these back end things that Amazon was doing really, at least so far. We could see this later, but so far not really having a huge impact in terms of how people are behaving. So let's see this. This is probably the last question, and then we'll end it here. We touched on this. Has there been increased search volume in terms of like longer queries in 2020 as opposed to 2019? So, and is there data suggesting this would consumers begin to do more? So we didn't really look at this. Again, we looked at just a specific slice in time in 2020, so we don't have year-over-year comparisons for this. I think it'll be an interesting study if someone does do it, which is how did search like really behavior change year over year? Were people more willing to research because they've got the time? Possibly, but we don't know. So I don't think we have any, I think, a firm data in terms of like folks are searching. And I think the good thing, and Gabe, you can touch on this. I mean, the way we architect, at least with Takemetrics, is we're going to base this on trends that are happening as they happen. So as stuff changes, like we change to fit that behavior.
Yep. That's entirely correct. We focus on building a dynamic and generic system that can react to changes in the marketplace or the availability of new data sources. We've been working really, really hard over the last 12 months or so because we know that you guys as sellers are like not only our lifeblood, but the lifeblood of the economy and just incredibly important. And so we want to enable you guys to react to this data, react to new sources of data, or the latest trends. And so there's a lot of exciting stuff coming out as it relates to Flywheel 2.0, inventory optimization, market intelligence, and data science and advertising.
Yep. Love it. Super, super exciting. I think we're going to wrap there. Miles, do you have a question? Yeah, you will get a recording of this webinar tomorrow at some point, along with a lot of the resources we mentioned, just links to those so you can kind of read at your leisure. So with that, we'll wrap up here. Thanks everyone for hopping on. Thank you, Gabe. This is a lot of fun. Hope you guys learned something, and then have a great holiday. This is our last webinar of the year, so have a terrific Merry Christmas, Happy Holidays, Happy New Year, and we'll see you in 2021.